Worries about China have roiled financial markets, but there are some misconceptions about the health of the Chinese economy, according to my next guest. He's Leland Miller, president of CBB International, which publishes the China Beige Book. Nice to see you here.
Thank you.
And of course, what you do is get on the ground and you do some independent research, so you're not relying on government data from China. So listen, everyone's been in a panic the last couple of weeks, but in what you found, the economy is not falling off a cliff.
Right. I mean, that's the remarkable thing about the quarter. It's not that remarkable. So we saw a slowdown in the third quarter, but it was nothing, again, it was nothing remarkable. It was a slowdown from Q2. It was a speed up from Q1. Growth was stable on year. You know, there wasn't that much that was different about it. You saw some improvement, you saw some slowdown, but certainly nothing that should be roiling markets right now.
But was part of the problem the currency issue? People looked at what was going on there and then wondered what's going to happen in the future.
Right. It wasn't what happened, it was what people was fearing could be happening behind the scenes. So you had a stock market mess that was further mismanaged and is in the process of being reversed. You had a currency move that people didn't understand, it wasn't communicated well. People feared that was the beginning of currency wars. You had the Fed uncertainty. You also had some lower, weaker data from China coming out from the PMI. So combine all that and people were just getting really, really cautious because you don't have that much visibility into the economy right now.
You did point out in your report, though, that China is not just about manufacturing anymore, and there was some health on the service side of the economy.
Well, that is the single most important thing people should be taking away. I think a lot of the way people approach China, especially now that official GDP is greeted with skepticism, is they wake up, they look at the flash PMI, they look at the PMI, and they say, well, manufacturing's doing better or worse or the same, and therefore China is doing better, worse, or the same. But what we've been telling clients for over 2 years is that manufacturing is not a microcosm of the economy. It is not a bellwether of the economy, and it's actually performed counter-cyclically as much as it's been cyclical in the last 2+ years. So manufacturing can perform however it might, and that doesn't mean that China is doing the same thing.
So do you have a guesstimate on what GDP growth is in China?
You know, we start with the disclaimer that it doesn't really matter because it's aggregate growth, not productive growth. I think if we're always pushing a corner, I think that 4.5%, 5%, the number is far less important, even if we knew it, than the directionality and how it will force the Chinese to acknowledge their overcapacity issues and their debt issues and other things like that.
So will the slowing continue from this point?
Yeah. No matter what happens, best case scenario, worst case scenario, China will continue to slow down. It will not slow down the same every quarter on a trajectory, a downward line to zero, probably, but it will be on a long-term slowdown. They'll either do it right and combat overcapacity and combat buildup of loans and go for slower, healthier growth, or they won't. They'll push back against reform, and then you'll have one of these more grim, hard landing type of issues.
And we don't know how it's going to play out just yet.
We don't, but what we can continually do is take cues from what we're seeing on the ground. The big problem that people have, other than looking at the PMI with too much of a focus, is to see too few data points. You see GDP, you see industrial production, you see credit, a couple of these other things. Well, you might have 4 or 6 data points, and I think people think that if you see 4 positive and 2 bad, that means the economy is doing well, or the reverse is it's doing poorly. You know, China Beige Book sees thousands of data points, and it's always a very nuanced picture. So the key is look at the data, interpret the data, and rely on the data.
Well, it sounds uneven at best, though.
It's uneven at best. It is a slowdown. It's just not a crisis. It's not a catastrophe. The economy's not about to fall off a cliff like a lot of people fear.
Does the currency get devalued again?
Yes, with an asterisk. A lot of people are coming out with these bold predictions, 15% devaluation, 20% devaluation, 10%. We do not think that's going to happen. However, if you have a strong dollar, you could see some depreciation against a increasingly strengthening dollar. So you could still have trade-weighted appreciation against the rest of the world, depreciation against the dollar. I do not think you're looking down the barrel at a 10%, 15% one-off.
Leland Miller, good to see you here.
Thank you.
Thanks. I'm Rhonda Schaffler for The Street.